We have to have the courage of our convictions and understand where the world is going and start preparing. I think it could go to new highs this year. Basically, Basel III is a way to steal slightly less and be slightly more honest with an inherently thieving system. And what is slightly more honest about Basel III than Basel II or Basel I? And there's definitely going to be a Basel IV and V if this whole monetary system, maintains itself for another 2 or 3 years or whatever. I mean, central plans never work, so they'll just keep coming up with more of them that don't work. But what's really important about this for us, and what is more honest about Basel III, is that gold, physical gold, the material, the metal, is going to be considered a zero risk asset, which it wasn't before. Until today in Europe, it was considered a tier 3 or whatever tier number. I mean, all these numbers are just arbitrary, but what changes is now physical gold is considered part of your capital, and you can lend against it at 100% of what you have on your balance sheet, as opposed to whatever, I don't know what percentage it was before, but it was considered more risky. At the same time, paper gold, meaning gold futures and gold contracts, the rights to basically unallocated rights to the physical metal, is not considered a zero risk asset. So banks cannot use at least as much of that, or any of that, I'm not sure exactly. They can't use that to fund the assets on their balance sheet. So what ends up happening is the demand for paper gold goes down and the demand for physical gold goes up, because physical gold is more useful for building assets on a balance sheet than paper gold. Now, where the Keynesian economists and all the people that run all these central banks shouldn't think that they are, at least in my opinion, they're not trying to hurt themselves, and they really do not understand gold. They just think it's some silly metal that for some reason humanity has some trust in. And same with silver. They don't see it as anything important. They've always struggled to understand why people have this sort of love for this metal. It doesn't make any sense to them. So they think it's just a commodity. And they think that the real center of the monetary system is the US dollar, and gold is supported by the US dollar. That's what they think. So they think that if you take away the ability of banks to fund their balance sheets with paper gold, then the demand for paper gold goes down. And therefore, when the demand for paper gold goes down, the price for paper gold goes down. And therefore, so does the price of physical gold. That's what they really think is going to happen. This is their thinking. And we have to understand this is their religion. This is what they believe. They believe in paper money. To the end of the universe, they believe in it, for real. But what they don't understand is that the dollar is supported by physical gold. The reason you can buy anything with the dollar is because it's still transferable into physical gold. You can still, and silver, you can still acquire some amount of this real money with this paper, and that's what gives it any purchasing power. So what makes manipulation possible is when they create these contracts and they dump them on the market, and that pushes the price of physical gold down. Right? When there is less demand for this paper and they can't use it to fund their balance sheets, that can't happen as often or as much or as intensely. So you'll have less of an ability by these banks to manipulate the market at 6 a.m, right before trading, and make these huge dumps. It should start to become less and less obvious. It's not that the dollar was backed by gold and silver. There was never any backing. It was the definition of silver. The definition of a dollar was a unit of silver. That's the original definition that's what a dollar was. If I'm going to take, let's say, an analogy on how social revolutions happen, right? If we take this whole, pandemic thing that we've been in, how does society change? It doesn't happen, in central committees coming and planning certain things and saying, okay, we're going to do this and that, and we're going to change humanity this way. They take advantage of certain things that happen, and they push society in a certain direction that they want. And then you see the change kind of like sort of like organically, but shifting through the reality that they're taking advantage of. It's like, what Rahm Emanuel said, you never let a crisis go to waste. So this is what's been happening the past year and a half. Is one of the greatest examples of that ever in central planning history. Never before has it been a global thing. It's always been national or country, but never global. Now it's global. same with monetarily. I mean, it's money started with gold and silver, and gradually, as crises happened, governments took more and more power. And we saw in 1933 there was another, crisis in the Great Depression, and FDR took that opportunity to take the entire gold supply away from the citizenry. But now they have so much power, and at this point, and it's important not to freak out when one side has so much power over the entire world, because when you have that imbalance, it doesn't sustain itself, and everything swings the other way and it collapses. So we're getting very close to that, and it's important for people not to be scared and not to be despondent about the amount of power they're amassing, because the faster they amass, once they have it all, they have none. Because once they have everything, everybody else has nothing, and they rebel.
Would you be in agreement that we're probably going to see a substantially higher price of the metals 5 years from now?
Oh, absolutely. Yeah. Yes, no doubt. 5 years from now. I mean, I think it could go to new highs this year. There's something like $800 billion in climbing stuck, flipping back and forth between the Fed and the banks. It keeps rising by like $30-40 billion a day, and it's going to hit 1.52 trillion in about a month at this rate. But the reason that all that money is bundling up is because it has no other place to go. Because it's a strange concept to even wrap your head around, but cash deposits are a liability on a bank's balance sheet, and a liability has to be backed with capital by bank rules. And the only way to raise capital is to dilute your shareholders for these banks. And they don't want to do that, so they don't want this extra cash. So they put it back at the Fed, and you have it building up and building up because of all the QE that the Fed keeps printing every month, $120 billion, and they don't stop because they can't stop. So this keeps building up, but where is it going to go? It's not going. They can't just snap their fingers and say, okay, $1 trillion going away. That's it. It doesn't. Financial markets don't work that way. So this money eventually has to go somewhere. And the reason it's not going anywhere is because there's no interest to earn by taking it out and putting it somewhere. So the paradox now is that when the Fed raises interest rates, because let's say inflation is like 6-7% on the CPI, and people start going, oh, Fed, you really have to do something about this. This is really not transitory. Please raise interest rates. And they'll say, okay, fine, I'll raise interest rates. So what happens then? Then all this money, it's going to be what, $2 trillion by the time they figure out they got to raise interest rates? They're going to raise interest rates, and then all that money is going to say, oh, look at that, we have a place to go, and all this money is going to be flying in. And then we're in a situation now where when they start raising interest rates, the money supply is going to explode even faster. So there's really nothing they can do. It's just we're waiting for this transitory narrative to die out, and the end should be pretty quick after that. I mean, I don't know exactly how quick, but if you've got a few years left on this planet, you're definitely going to see it. We have to have the courage of our convictions and understand where the world is going, and start preparing. The dollar is still today backed by gold because of the Misesian regression theorem, which meaning what prices, what you need to buy today because you know what prices are today because you knew what they were yesterday, and so on into the past. When the dollar began, because when the dollar began, it was an exchangeable thing for gold, and gold is what started transactions, and that's how the monetary economy started. So it all goes back to gold. So the reason that the dollar has value is because it can still be exchanged for gold, not necessarily oil. So when oil goes up, it's more of a reflection of the dollar's purchasing power going down generally than the dollar providing the backing for oil. Rather than oil providing the backing for the dollar. So I expect oil prices to go through the roof when the dollar collapses. Less and less gold should be able to buy more and more oil, and that's really the interesting ratio that I want to follow.